What's poppin', everybody? Welcome to another video. Today I'm going to be talking about time frame alignment. I'm going to show y'all some examples and how you can use it to your advantage and how you can use it to increase your win rate, increase your profitability, have a better risk reward on your trades, make more money, and overall just be a better trader with this. So if you don't know what time frame alignment really is, first of all, you need to understand that price is fractal. So the markets move the same exact way no matter what time frame you're on, whether you're on the 5-second, the 5-minute, the 10 minute, the hourly, the 4 hour, the weekly, the monthly, the yearly, whatever the case may be, the market will move the exact same way. The candles will print the exact same. Every strategy, no matter what you trade, correlates to every time frame. Now, yes, some strategies might work better based off an internal time frame or an external if you're a swing trader versus a day trader. If you like to hold your positions longer, you would obviously be on the higher time frames. You wouldn't really look at the lower time frames. However, understanding time frame alignment can definitely help you get the best risk rewards, overall increase your win rate. You can also avoid some losses with this. I'm gonna break it down. So firstly, this chart right here that I have is basically just breaking down what time frame alignment is and each time frame and how it aligns in correlation to each other. So the monthly, if you're looking at the monthly, you would go to the daily. Looking at the weekly, you go to the 4 hour. The daily, you go to the 1 hour. 4 hour, go to the 15-minute. The 1 hour, go to the 5-minute. 15-minute, go to the 1 minute. 5-minute, go to the 15-second, and so forth. 1 minute, 5 second, I wouldn't really recommend going beneath that. However, it is there if you want to use that. So for my trading, I trade ICT concepts. A lot of the times I am taking trades based off fair value gaps, based off of some type of PD array. And the way that correlates and how that is worked in my advantage is essentially, so let's say this is my chart. This is my trade right here, right? Let's just say I am entering a short position based off of this. Let's say this is a 5-minute fair value gap. Let's say I want to enter short on this 5-minute fair value gap, targeting the opposing sell side liquidity. Instead of just entering off of the 5-minute, instead what I'm going to do is, because price is fractal and price moves the same exact way, I'm going to zoom into the 15-second and look for this exact same pattern. Essentially, I'm going to look for the exact same thing on the 15-second. So as y'all can see here, I had let's say if I entered based off the fair value gap, about a 3-to-1 risk reward. Now, let's zoom in here. Let's pretend that this is a fair value gap. Where'd it go? So this is a fair value gap, the 5-minute. Now we're looking at the 15-second. Now we can see more clearly, more in depth what we're doing. Now let's say we get this right here, the same exact entry, but it's on the 15-second now. And we're still targeting that same opposing, liquidity pool, the 5-minute time frame alignment. Now I will enter based off of the 15-second. The 15-second will be my entry model, and I'm targeting that external liquidity pool. I'm going to enter based off the change in the state, whatever the case may be. I'm going to take the change in the state, fair value gap, whatever the case. And this is now my entry. Now my risk to reward is almost double. That's basically time frame alignment. And another way that you can use this to your advantage is when you do say you have a higher time frame entry model, you can zoom in, wait for the same exact entry model, and if it doesn't present itself, then that 5-minute imbalance will get ran through, or that 15-minute will get ran through, the hourly will get ran through, and you will avoid a loss with that just by being more patient, understanding time frame alignment, and waiting for that exact precise entry, because the markets are fractal and you will find the best setups by doing this. And this is just a way that I have been trading, how I have been, using it to my advantage in order to obtain the higher risk to reward trades, avoid a lot of losses. I found when I don't use time frame alignment and when I do just blindly enter off an imbalance, my risk to reward is always worse. Plus I lose a lot more. Not saying that you can't be successful without it. You have to do this every time. You have to zoom into the 15 or the 5-minute, whatever time frame you're trading off. You have to use the fractal entry. However, it definitely makes it helpful. And if I think to start out, if you're not, say, accustomed to this, or if you're not fully comfortable, a way to start is you enter, say, a quarter position size or half of your usual entry. Once we do get this initial tap, then you zoom in to the 15-second, and then once we do get that internal model, then you add the rest of your position, adjust your stop loss. Now you have a much better risk to reward trade. It's the same exact thing. This can be a 5-minute chart, an hourly chart, a 4-hour chart. Say this is a 4-hour, this will be the 15-minute. So 5 minutes will be a 15-second. The 15 minutes will be a 1 minute. And just understanding time frame alignment. And this is how you can, get the better risk to reward trades. This is how you can increase your win rate and overall just be a better trader, because it tests your patience as well. You're forced to be more patient. Now, yes, price is in a zone where you expect it to reject, but now you're waiting for that overall internal confirmation. You're waiting for price to really fully tell you that, okay, this is what we're going to do. Now, this isn't for every trader. This isn't for every model. This isn't for, why is it like that? This isn't for, every system. However, if you do find a way to integrate it, and if you can, adapt your trading to it and overall just implement this just small little tweak into your trading, I think that it can definitely help you overall just earn a higher risk reward, increase your win rate, avoid a lot of losses, and overall just help you out. That's about it. I can show you some live examples as well. Let me see if I can find something real quick. Let's go to the 4-hour for say. So I can see right here, the 4-hour, we tapped into this 4-hour balance. Now we ran this 4-hour balance. So let's just say I wanted to short this to the 4-hour equal lows, right? I would then zoom into the 15-minute and wait for a change in the state. As you can see, the change in the state would come at this low. I'm waiting. We never got it. We never closed fully beneath it. We're still waiting. Never got a body close. Well, I'm tripping. This is the wrong imbalance to use, but this is from a Sunday. Let me look for something else. But y'all can get the idea though. We never got the internal model that aligns with the 4-hour. So as you can see, we ended up running it. We never actually got the internal model. 4-hour got ran. You could have saved yourself a loss. Same exact thing. Let's find it somewhere else. That's an example of an avoided loss because you waited for time frame alignment. Let's find an example where it actually did work. No, I don't want to use that one. Let's use right here. Tapped into this 4-hour imbalance. And then zoom into the 15-minute. We wait for some type of 15-minute model, which we get right here. Change in the state. Inversion fair value gap. So let's enter. Let's say we enter here, stop at. I will end my stop right here because we do have the inversion as well. We shouldn't really come back beneath that. Targeting that external high, that gives us a 2-to-1 R. Now let's say we enter off the 4-hour. Just off the 4-hour being tapped. Say your stop is at, either this low. If you want to be more safe, it would be this low. It's a negative risk to reward. Because price easily can wick down here and stop you out if you want to have your stop at this low. You can get a higher risk to reward. However, it is much riskier trading. And when you are trading, you don't want to, like, top ticking and bottom ticking is cool, but at the end of the day, you're going to take a lot more losses by doing it. You're going to end up taking a lot more trades trying to, catch the highest risk to reward, trying to top tick and bottom tick. I'd rather be a sniper. I'd rather trade with precision. I'd rather take less trades, have higher accuracy. And I think that's overall just a better way to go about it. Now, if it doesn't work for you, it doesn't work for you. But I think that this is very helpful. And boom, now we just ran this 15-minute. That gives us even more confirmation. So right here, you can then even pyramid if you want to. You can adjust your stop loss to break even now because we did just run that 4-hour or that 15-minute imbalance. Now we shouldn't come back down there. We should just boom. And simple as that. That's where you can use time frame alignment, understanding how each time frame works. I'm going to go back to that chart for y'all. Show y'all how, or you can screenshot it if you want. Where'd it go? My picture disappeared. I guess my picture disappeared, but I'll put it back up for y'all. Or y'all had it from before. Just zoom back if you want to screenshot that if you need. But that's time frame alignment, though. That's how you can use it to your advantage, how you can get an overall better win rate, and how you can increase your accuracy when trading. So yeah, hope y'all learned something. Hope y'all enjoyed this video. Please like, comment, and subscribe. We about to hit 100 subscribers. I want to say we at 99. So please hit that subscribe button, like, comment. We'll continue giving y'all game, continue giving y'all gems. So yeah, I appreciate you for watching. Catch you in the next one. Peace out.